displaying the video or the audio. I've just turned up the audio on my speakers here on my own computer. So what we're going to do is we're going to actually get this thing going, even though it's been a total train wreck. So Matt, I want to start off talking about just everything that's kind of happened here in the last 3 months, because I think the price going down to the 4,000 mark, and I know it was only there for literally hours, but I think it caught everybody off guard. And I'm just kind of curious how you saw that as a miner, how the price has recovered, the fact that it hasn't shot up over 10,000, and kind of the pain that that's created for the whole, mining community as they're looking at things today.
Yeah, I think, in March, it was a flush out. There's really two types of difficulty adjustments. There's a price-induced difficulty adjustment where you get that type of capitulation, and because price unexpectedly corrects in Bitcoin, and it just throws everyone off, and margins really get screwed up. People are underwater. They're below their break evens. They have to shut off. It's like a shell shock to their operations. And now we're getting another type of capitulation, which is a halving-induced capitulation. Everyone understands that their margins are becoming thin, so they're kind of prepared for it. But it's still going to make facilities go under and capitulate. Capitulation, I think it's a term. My background, I started off in the Bitcoin space running a digital currency hedge fund. So I think of capitulation from the hedge fund side, where someone is operating, they're caught off guard, and they're operating near zero, and they're pressed for several weeks or months, and they finally throw in the towel. It's ultimate exhaustion, and they finally throw in the towel, and then they're done. So it could happen unexpectedly, like we had in March, where the price just corrects nastily and wipes people out, or it could happen through halving, where margins have been very thin and it's stayed down there, and maybe people were hoping the price of Bitcoin would go up, but it hasn't. It's left people in what I would call purgatory. It's everyone, the whole market is in this very, very thin margin arena, and it's bleeding several different miners out, and that's the shedding. So March, you had people really get caught off guard, having to shut down, liquidations are happening, and right now, this is a more expected one, and people that need to still upgrade, they understand it, but they're still going to go through liquidation. I mean, we're working on a large auction and liquidation right now. We're going to likely scoop up about, what's the number, Sam?
12, 13.
A couple thousand S17 pluses from a facility, because their electricity rates have kind of gone up. They're underwater due to the halving. They still have a lot of old gen, and it's bringing their total operating costs down. So that's a different type of capitulation that's more halving induced. So there's two different types.
So, when we're looking at, and I'm just going to warn everyone, I'm having a hard time concentrating because I'm seeing the comments there that you can hear the questions popping up, but I have to have that sound there because the way that I have the sound set up, so it's kind of a disaster, and I'm a mess right now trying to coordinate all these disasters. And just be aware, we're probably only going to go another 10 or 15 minutes just because of the sheer technical mess that this is. I got to get somebody here that can somehow rig my setup going from podcast to live streams, because I clearly have not figured it out. All right, Matt, I apologize. And folks, if you want to put some questions for Matt in the on the side here, please put them in there. I'm seeing the comments, and I'll throw those up to Matt as we go. The thing I'm looking at right now are your reports that you wrote. You have a new one that came out just in the last couple weeks, right, Matt?
Which one is that?
I'm looking at the one that says the mining market is not immune to human psychology.
Oh, that was 2019. That was March of 2019.
Okay. All right. I'm getting them mixed up here.
Yeah.
So talk to folks a little bit about your how you're repurposing miners that are capitulating at this point, because you're going out, you're buying hardware for pennies on the dollar. You're then already having somebody in the chute ready to buy that. Talk about how those weak hands, or the miners that haven't been able to manage their risk or manage their cost structure, and how those are going into much stronger hands that have done a great job of that. So walk us through some of that.
Yeah. So there's a lot of facilities that have these mid-gen mining rigs that they could have bought just a year ago. And because the next gen equipment has become so powerful, and now they're all sold out until through December, rigs are coming online. So it's counterbalancing the inefficient miners that are shutting off. So that's why we're not seeing a massive drop in difficulty, because you're getting, difficulty is net rigs plugged in. So old machines are coming offline. Since Bitcoin still has not taken off beyond 10,000 and gotten into the 12,000 to 15,000 range, we're in that purgatory state. So margins are thin for many different miners. So miners running old and mid-gen, they're shutting off, and you would expect difficulty to go down, hash rate to drop off, but that's not happening. It's being masked. It's being masked because new money is coming in, and they're deploying next-gen equipment. And there's other facilities that are operating with lower than expected electricity. This is really interesting. When we were scoping out different sites during Q3 and Q4 of 2019, when we were going to launch our Bitcoin mining fund, Blockware Mining, there were different facilities that they were mining around 3.8 cents, and the utilities were going to hike their rates to about 4.2 or 4.6. This was 6 months, 6 to 9 months ago. And then COVID happened. And of S9s that are leaving the US, and they're getting sent out of the country to Kazakhstan and to Venezuela, where there's sub 1 cent electricity, and some of those S9s that got shut off in the US, they're getting deployed over there. So once again, you're seeing a masking of shutoffs. Miners, there are facilities that no longer can operate, or they have to upgrade to the next gen. But we're no longer seeing the relief in difficulty because that old gen is getting repurposed, or next gen is getting plugged in, and that counterbalances hash rate and difficulty.
So, dude, you just crushed half of this, and I jacked it up because I was trying to get your video. I was trying to jerry rig your video into the feed. This is just brutal. It's totally brutal because, oh my God, I'm trying so hard to make it work, and everything that I'm doing is just making it worse. I want to ask you some more questions because I just kind of have an epiphany as you were saying that. So as all these rigs are getting repurposed, in my head when I'm thinking through a capitulation, I'm thinking, oh, that person went bust, like they went bankrupt, and I'm not thinking about how quickly somebody else is stepping into the market. You got this great free and open market where things are getting repriced way down there, like you said, pennies on the dollar, and then they're just going straight into another person's hands that are then putting all those rigs right back online that has cheaper energy costs. So although we see these capitulation events, like I'm always posting these hash ribbon charts that Charles is putting out, and in my mind, I just wasn't thinking about how those rigs, and so I guess my question for you is, how long does that take for those to come back online? Are people turning those in 30, 60 days? Like, how fast are they able to sell it, put it into somebody else's hands, and they can actually put it back up on the network?
I think 30, 60 days is a great number, because there's friction with trust. Is the used equipment, what's the integrity of the used equipment? Are they hashing properly? The buyer wants to see hash reports. They want to ensure they're not getting scammed. And then you got to send it over. They're going to clean it up. So yeah, it takes 30 to 60 days sometimes to really get these rigs going. And on these distress deals, some of these deals where the landlords are literally kicking out the miner, the landlords are repossessing the rigs. So now they become the owner of the rigs. And that's also why some of this stuff is selling so cheap.
Because they just want to get
the
off
landlord
the books.
just wants, exactly.
Yeah.
They want that stuff out of there. And in some scenarios, if it goes into the government's hands, then it could take 6 to 9 months. So that's why guys like us who are looking at some of these distress deals, we want to go in there and we want to work directly with the landlord, buy stuff up immediately, or with the former owner of the rigs, buy stuff up immediately and ensure it doesn't go through bankruptcy and get tangled up for 6 to 9 months. So if you can do that and you can move this equipment quickly, then you can get into a new buyer's hands, and that stuff can get back on the network 4 to 6 weeks.
And I'm just thinking about the margins for somebody who's acquiring that at a fire sale price, because I mean your returns are based on your purchase price of the asset. So I mean, if you're scooping these things up at fire sale price, even though they're not pumping out the hashing that new rigs are pumping out, if you're buying it for 1/3 the price, I mean that's very profitable in the long term. Would you agree with that?
I think mining is one of the best areas to make money in the blockchain Bitcoin space.
Really?
The owning the mining rig and what you could do with it is unbelievable. I think the S9 is the cheapest call option on Bitcoin out there. There's S9 selling for $20 or $25 right now.
Really?
With the PSU, they're selling for $20 or $25. And if you have 2 cent, 3 cent power, let's say 3 cent power, and they're making, let's say $15 a month, you earn back your money in a month or two. You remove your cost basis, you earn back your money in a month or two. Now, let's say Bitcoin goes up.
Now it gets really crazy.
From 10,000 to 13,000. So Bitcoin goes up 30% in price. But how that flows to the rewards of the S9, the S9 will start making from $15 to about maybe $35. So now the S9 is making double or 140% more. So the value of the S9 is no longer going to be worth $20 or $25. It's going to be worth $45 or $50. So you've removed your cost basis on that S9, and the S9 is appreciated more than 100% in value because of the earnings, the future cash flow earnings, where Bitcoin only went up 30%. So the S9 right now, I believe that is the most attractive call option on the price of Bitcoin.
Huh. Now, you said 2 to 3 cent energy costs. So What does that look like? Describe that for a person here in the U.S. Like, how are you achieving that type of expense for your energy?
So there are some really sophisticated minds out there. Natural gas, extremely achievable. We have a client who's got 1 cent electricity. This is where a lot of acceleration is. There's a lot of growth. Miners are partnering up with oil companies, and they're putting the pipelines in the oil wells. They're pulling out the natural gas. They're running the piping maybe a mile away. They've got a container deployed a mile away. They're hooking it up to a natural gas generator. They're generating electricity at 1 cent power, and they're running rigs, and they're completely off the grid. And they're achieving 1 cent power by doing this. So that's one area. There's
And this is the first cycle we've seen that, right?
Yeah, for the most part. There's people that have been doing it probably for about a year and a half.
Yeah.
But now it's out there. People understand it. People are scaling.
I mean, that's going to become a feeding frenzy here in the coming year.
It definitely will. And it's an energy play. People are doing this because Bitcoin consumes so much electricity. So it's a lucrative opportunity to really optimize, fine tune, and understand how to create this energy mechanism through containers and natural gas generators. And they're gonna scale this out and power small towns. I mean, that's the big picture, and it's going to be completely off the grid.
They're going to scale this out and power small towns. Explain that to me.
So, right now they're doing it at small scale, like 1 megawatt, right? If they think about if every block has one of these units, they can start running residential blocks off of these units off of natural gas because there's excess, and you just have the piping run a mile or 2 miles. You have the oil well and you have the piping where the natural gas is coming out of the oil well, and you put the piping in there and you have it flow however long you need to have it flow, whether it's a mile, 2 miles, and then it connects to the container and the natural gas generator. And then you connect that to whatever electrical infrastructure. Right now, it's for Bitcoin mining, but people will leverage it for other use cases, right? And that's all off that is not using the grid at all. So that's fascinating to me. And the electricity rate's about 1 cent. It's more Capex intensive. So once they make that more efficient, that's kind of the counterbalance right now. It's Capex intensive, but they'll get around that. And when you do things at mega scale, the Capex becomes worth it, especially if you're consuming enough power. Now think about.
And I'm sure a lot of them are a little nervous spending when they're looking at the Capex and they're looking at the depreciation of that over an extended period of time, and they haven't experienced the price run of a 2017 kind of bull market. So I think as the price starts to run, they're going to start looking at that Capex bill a little bit differently.
Correct, because you'll earn it back very quickly. But the big picture here, think about the data centers, the Amazons of the world, the Googles, the Microsofts. If they start having these different generators plugging into their massive data centers that are consuming significantly more power, it doesn't need to be sexy, right? It doesn't need to be really, really residential grade. If you're doing this if you just put a data center and you're running a large hub for Amazon Web Services, right? So that's where things can become super, super interesting for the guys that are figuring out how to leverage natural gas and convert it into electricity.
And you're saying this
with
you're saying for them that they have the resources aren't being utilized to the capacity that they could be. So let's just run them when they have
Correct.
the opportunity to run them. And so is anybody in the space already leaning towards doing that right now that you're seeing?
Yeah, right now the clients that I'm working with, they're strictly doing this with Bitcoin mining. But they all discuss it, and they say the big picture and the big play is data centers and taking this to the real world. They're more in this for the energy play, but right now they can make a good amount of money mining Bitcoin. So that's exactly what they're doing.
Dude, that's fascinating. So what percent would you say of this natural gas, if you were going to take all the hashing that's happening right now in the protocol for Bitcoin, what is this, 10% of the hashing? Is it even that?
Tiny.
Yeah.
Very tiny. Yeah, I would say under 2%. I think it's most relevant in the U.S. And it's growing in the U.S. But yeah, it's quite small right now, but it will grow.
So some of these, I had a couple people send me a couple tickers. I don't remember what they were, but they were specifically mining operations that were in the public space. And I mean, I was looking at the numbers, and they look like a venture startup where they were just kind of a disaster. So, I'm much more of a public stock kind of guy where I'm going in and I'm looking at the 10Ks and the 10Qs and trying to determine what the value of it was. And the tickers that I saw for some of these miners were just like not even worth my time because the numbers just did not look good. So I'm kind of curious, is this much more in the private sector that you're seeing some of these miners that are performing well? Because the whole Bitmain thing was a disaster. So I guess for a person like me who does not have any of this intimate knowledge that you have of the space, I'm just looking at it and I'm saying, my God, I never want to get in something this competitive that's so commoditized. But after hearing some of your thoughts on repurposing some of the hardware, it takes on a whole different shape and meaning. So I'm kind of curious for some of the big companies and some of those ideas that I'm throwing out there.
Yeah, I'll tell you, it's right now. I would not invest in any of that. The publicly traded, mining operations, any of the blockchain assets. The number one, the stuff that we're doing, we have a Bitcoin fund called Blockware Mining. It's a facility in the U.S. I'm actually, after this podcast, we're driving down there, and if I wanted exposure to mining, there's a lot of hodlers out there, and mining, I think, is an exceptional complement towards holding Bitcoin. When you think about, first off, you want exposure to Bitcoin because this is just a disruptive technology in its infancy, and we're in the early stages. Now, you could achieve this exposure by owning Bitcoin, which a lot of people do. But if you've had Bitcoin since 2017 and you bought it at 8,000, 9,000, or 10,000, you've made nothing. It's just traded sideways for 3 years. If you've been mining since 2017, you've probably made 250% plus, and you can sell your electricity and the excess that's margin, you can hold Bitcoin and accumulate Bitcoin. It's an arbitrage. It's truly an arbitrage, and it's dollar cost averaging. When you think about stuff like Amazon or Google or Facebook, any of these disruptive technologies, you want you don't want to day trade this stuff. You want to sit and hold this for several years, take a long time horizon, and you don't want to just pay once and hope that you got a great position. I think the approach should be dollar cost averaging, and mining is the most effective way to do that. Because when you plug in these machines, you are getting rewards every day. So if you would have launched in 2017 with a miner, you would have accumulated Bitcoin every day, and you would have been buying, some of it you would have been buying at 10,000, some at 8,000, 4,000, 3,000, and then back on the way up. So it's the most effective way to dollar cost average, and we think that's how you should be handling Bitcoin. And we offer that through our fund, Blockware Mining. And what that is it's a hosting facility. We have mining rigs in the U.S. that miners could buy. So that's really what's attractive. We expected this massive supply constraint. So we went out and bought, we have about 2,000 of the S17 pluses at our facility, and miners are buying them off of us. And some of them just want to buy the rig and run it at their operation, and that's cool with us. And others, they may be at the $5,000 or $10,000 level, $10,000 level, and they don't completely have wrapped their heads around it, but they want exposure. So what they do is they buy the rigs from us. We keep the rigs at our facility. They now own the rig, and the mining rig points to their wallet. The Bitcoin goes directly to their wallet, and they get to do as they please with their Bitcoin.
So, but Matt, anyone who's hearing that is saying, well, then why are you selling it to them?
Well, that's part of our business model. We have 3 revenue streams. We're self-mining a great majority of our rigs. We also, and then we diversify, because now.
So you're arbitraging the price. Okay, so you're arbitraging the price that you bought the mining rig for, and you're collecting the premium on that for when you resell it.
That we do sell it at a premium, but also it's because we diversify our operation, because now people are paying us a hosting fee, right? So it becomes a cash flow business as well. So a majority of the stuff we self-mine, we accumulate Bitcoin, and then if people want to buy the rigs, they can buy them. The rigs stay there, and now they're paying us a hosting fee to manage the rigs. And when you look at our rates, they're industrial scale rates. So we're getting miners who typically pay 7.5 cents for an all-in turnkey solution at 6 cents, which is what a lot of people running 1 megawatt are paying. So we understand that. You know, I've been doing this for 3 years, and people used to pay anywhere from 7.5 to 11 cents, and I just know that that's not going to work for them. So if we get them, we understand if we get them in next generation equipment and get them below 6.5 cents, they're going to be protected, because they don't have to pay for a facility. They don't have to pay for electrical infrastructure. They don't have to pay for the management team. Mm-hmm. That's all included. So when you break that apart, their electricity rate is truly about 4.5 cents. And then they're paying these extra expenses for electrical infrastructure, shelf spends, exactly.
Yeah.
And really how to cool the units. Right?
So if a person was going to try to do all this on their own, let's say they want to buy the hardware, they want to start up their own little mining operation, what type of electrical expense would you tell them today that they're going to need to have in order to do this and be able to compete with these large scale operations?
You know, if they're paying for the Capex, right? Like if you're building something out like in a shed, and you're going to run 20 or 30 miners, you have to buy an industrial grade router. You have to buy the shelving, the control panels, possibly a transformer. If you're running, 100 rigs, transformers are like $40,000, right? So it just doesn't become economical unless you're running a megawatt plus. And if you're doing that and you're paying for all that electrical infrastructure, paying $100,000 just for electrical infrastructure, and then you got to pay hundreds of thousands for your machines, you probably want to be at 4.8 cents or lower to be competitive. But if you're doing it at a hosting facility, yes, your hosting rate is higher, but you're not sinking all this money, hundreds of thousands of dollars, into electrical infrastructure and transformers and paying for the labor of someone resetting machines every day and stuff. That's all included. So that's why we get these miners at 6.3 cents, and all their money goes towards revenue generation. All they have to do is buy the mining rig. And when you pull apart and make those comparative analyses, their electricity rate is the equivalent of sub 4.5 cents. And that makes sense over the long term. they might encounter pockets of 4 weeks in the year where they might have to shut off, but they're very competitive where over the course of, right, you marry your time frames. When you buy a mining rig, that mining rig is going to run likely 3 or 4 years. So you marry your time horizon and your expectations towards the life cycle of the assets you're buying. So you're probably going to have, if you're at 6.3 cents in a hosting contract, you may have pockets where you're under pressure or you're underwater and you may have to shut off for several weeks. But if you're able to run for 85, 90, 95% of the time, you're going to earn back all your money and then some, and you're going to accumulate the Bitcoin. And you'll have achieved dollar cost averaging, which we think is most important.
Matt, I want to ask you about where we're at in the cycle, because one of the things that you wrote, and it's one of the first things in one of these reports that I read, it says the specific trend we look for during turning points in market cycles is the churn and transfer of assets between retail and institutional investors. So based on what you've seen in the past 2 months, 3 months, is that what you're seeing right now?
Yeah. Right now, we're not seeing as much, I would say we're not seeing as much capitulation. In 2018, quarter 4 2018 and quarter 1 2019, there was more transfer from retail to institutional. Right now, we are seeing a large influx of institutional. We are seeing a lot of accumulation on the institutional side. And it's really because retail has not participated in 3 years. So there really isn't retail to transfer mining rigs to the institutions right now. Right now, it's kind of just inefficient miners or miners that need to upgrade transferring to really intelligent, smart money or to really efficient miners. But we are seeing influxes of big money from institutions. So I would say that we've just had a nasty bear market that started in 2018 and it's continued, and we're really bottoming out. And I think we're out of that bear market, and that's why we're not seeing, what you said, the transfer from retail to institutional. It's because I don't think the retail is even existent. When I talk to my friends, they're not pinging me about Bitcoin. People still have not done that. That is great signal. When you start seeing retail, your buddies who haven't talked about Bitcoin in a year start messaging you, now you start seeing the retail participation. I think so we're not seeing retail coughing up and capitulating. I think what we're seeing is institutions coming in, accumulating whatever's left over, and I think we're going to start seeing a dual force of institutions buying and retail starting to buy. And we're seeing it in the spot with Square. Square is the first canary in the coal mine for retail. If you look through their quarterly report, Cash App has been accelerating, and the revenues they're generating or the sales they're generating through Bitcoin has been accelerating. And I'll tell you, Paul Tudor Jones is not buying through Cash App. That's retail. And now PayPal has identified, right, that there was just news about PayPal and Venmo, how they are going to start, they're seeing Cash App become more popular, and that is driven by people leveraging Cash App to buy Bitcoin. And now PayPal is stepping in the arena, and they're going to do that with Venmo. So when you see the publicly traded companies who understand the market, the beauty of these large, I shouldn't say the beauty, but an advantage of these large tech companies is they understand their clients. They have hundreds of millions of clients, and they suck up their data and they understand them. And Jack Dorsey has done a great job, probably because he marries the information from Twitter and Square, and they've been at the forefront of leading with Cash App, and now PayPal sees Cash App eating Venmo's lunch, and now they're getting involved. And it's still speculation, but it looks like it's real. And they're going to start allowing users to acquire Bitcoin through Venmo and PayPal. And that is signal of retail. And when you get, and this is all on the spot side, the Bitcoin spot side, when you get both levers, institutional money and retail money participating on that buy side, that's how you get, the number we're all looking for is 10,600. We need Bitcoin to break through there. And I think having those two forces, institutional accumulation coupled with the retail participation, I think that's what's going to blow us through. And that's what's going to lead this next bull market in Bitcoin. And I was telling you how right now the mining market reminds me of late 2018 and early 2019, where margins were really thin, and it looked horrible. And we released that paper how Bitcoin miners adapt in a bear market in December 2018, going to the bottom in the mining market, which was accurate. People went in and made a ton of money because Bitcoin shot up from 4,500 all the way to 54 and made its way to 13,800 by June. I think we're in a similar environment right now. I think the Bitcoin spot price is going to start a bull market, and it's going to pull the mining market out of the purgatory bear market, and miners are going to make a ton of money. And it's a perfect storm for the miners who have rigs right now. You asked me, well, Matt, how do you make money? Why are you selling rigs? Why do you sell it at a premium? Because I know, and we've been planning and expecting this supply constraint. No one can get rigs until December. Think about that. If Bitcoin takes off and people want mining rigs, what are they going to do? They're going to have to wait until December to buy mining rigs. So you got to buy them domestically. So those deserve a significant premium. There's going to be a supply constraint, a massive supply constraint. And if the Bitcoin price shoots up, people are going to want to get their hands on mining rigs, and they're not going to be able to do it. And there's going to be 6-month lead times, and who knows what things look like now. And that's why you got to get your hands on mining rigs now, because if the opportunity's there and you're not positioned, you're too late. So you got to buy when it looks terrible. And that's what we've done, and that's what we've encouraged some of our clients to do. They've bought their rigs, they've got them plugging in. The earnbacks do not look good right now, but you wait a month or two, if Bitcoin shoots up, they are going to make, and this is really how a lot of markets work. You were from traditional finance. As a hedge fund manager, most assets, you make 6 to 9 months of your money in 3 or 4 weeks. Those miners in 2019, when Bitcoin shot up from 5,400 to 13,800, they made their whole year in 2 months because no one else had mining rigs. Everyone else saw the price shooting up. They tried buying mining rigs, and the lead times were 3 or 4 months. And Bitcoin had already topped out, and then the rigs were coming, and margins were going down because Bitcoin started correcting. So you gotta have the rigs plugged in and going before the correction starts. That's critical with mining, and you accumulate and you dollar cost average.
So Matt, I'm going to go with one more question here. The capitulations that we've seen, are you still seeing a bunch of buying opportunities for miners that are capitulating, or are you starting to see some of that fade away? I would imagine a month ago you were probably at fever pitch with calls with miners that were not making it at that point. Is that accurate? Like, when was the timing where you were getting the most calls, or is it right now?
Before there was a ton of calls on S9s. I mean, there were S9s everywhere, and size of tens of thousands of S9s. And now, it's just a pecking order. So the S9s they pump out 13.5 terahash. and then it's just a pecking order, where now the machines that push out 30 terahash, those are getting liquidated. And now some of the machines that are super inefficient, they consume a lot of wattage, but they're pumping out, in 50 terahash, those are starting to get liquidated. It's companies that do not create efficient machines. So like your Silicon, your eBang, and those are under pressure. And now those are starting to get liquidated. But they could go towards miners that have cheaper power, and they'll last for a year or two once they get to the right hands. And that's why I say there is capitulation going on, but it's being masked because you have next gen getting plugged in, and these old gen or these inefficient machines are getting repurposed. So it's really healthy. It's really healthy.
Yeah. I guess I do have one more question.
Yeah.
Are you bullish or bearish in the coming month?
Everything is kind of like a prerequisite. At the end of the day, we're accumulating Bitcoin because we do expect it to really break through. But if it doesn't, at the end of the day, opinions are wrong frequently, right? So you need price to confirm. And unless Bitcoin breaks through 10,600, we're just in this trading range. And we can go down into the 7,000s. But, we're quite confident. We are actually very bullish. And as I said, think about what a fund does. They don't just deploy all their capital just to mining or just to buying Bitcoin, or they don't deploy all their capital just to mining Bitcoin. They're going to get a diversified exposure to the Bitcoin space. So they may deploy 50% of their capital towards projects building on the Bitcoin network or services for Bitcoin, and then 30% towards physical Bitcoin, and then 20% towards mining. So when I see institutions and funds deploying, we're basically the market makers on the mining rig side. So I could see what's going on there, and I know who's buying and selling.
Yeah.
So when I see millions of dollars for buying mining rigs, I know that they're also deploying towards buying physical Bitcoin, and buying equity in these different companies. So I see all the money pouring into the mining space and buying in the mining rigs. That positive sentiment is there for Bitcoin spot as well.
Yeah.
So yeah, I'm crazy bullish because the money is pouring in, and at the end of the day, net fiat is what moves price. So when you get this influx on the demand side, that's what moves price. So we're seeing it,
Yeah. I mean, with the reward flow half as much as it was a few months ago, I think it's an exciting time.
Yeah, exactly.
We'll see. All right, Matt. I'm sorry about the feed. If you pull this up on YouTube after we're done here, you're going to see that there's a big Skype emblem for where you're at, even though you and I are looking at each other. Just a technical disaster. But I appreciate your patience and really appreciate you chatting with me tonight. I really love talking to you because, like you said, you're a market maker in this space of repurposing miners. You're seeing the dollars flowing into the sector, and it's just kind of neat to kind of get a peek behind the scenes of everything that you're seeing, because it's not something I definitely have any type of exposure to, and I'm sure most of the people that are listening to this don't have any type of exposure to it. So it's really fun to kind of tap into your thought process and hear some of your inside stories as to what's happening behind the scenes.
Yeah, absolutely. I appreciate you having me on. We'll do this again, and it's great. You're a great asset towards crypto Twitter and to the space, and I love the guys who could bring traditional finance into this and bring the parallels because there are so many. At the end of the day, this is all a market, right?
Yeah.
It's all human psychology, and that's how we should be thinking about this. And when you couple, I love our conversations because I am in the weeds and seeing things, and you and I can create draw some great conclusions based off, your experiences and mine.
Yeah.
So looking forward to it. Always.
Yeah, appreciate it. Safe travels, and really appreciate your time.
Thank you. Take care, Preston.
Yeah.
Thanks, everyone.